I think one of the reasons venture capital has had so much trouble during the last few years and strategies in the innovation space, especially in life sciences.
Cathie Wood, a well-known hedge fund manager, has increased her projection of $1.5 million for Bitcoin by 2030. Cathie has been optimistic about cryptocurrencies and the whole digital assets market for a number of years. However, after President-elect Donald Trump's historic win at the polls, she has grown even more optimistic. Under a Donald Trump administration, Cathie thinks blockchain technology and other disruptive technologies could advance quickly because Trump's signature government deregulation could spur innovation in the upcoming years. Cathie is quite hopeful that the world economy will undergo a significant change soon due to the quick development of 5 disruptive innovation platforms: energy storage, robots, blockchain technology, artificial intelligence, and genomic sequencing. She compares these technologies' convergence to the early 1900s, when the telephone, electricity, and internal combustion engine all had revolutionary effects. But according to her, this new innovation wave will result in an even more significant economic shift. Cathie believes that these 5 platforms will create an unprecedented economic boom, even if those prior innovations caused real GDP growth to expand 5-fold. Similar to digital gold, which is more attractive to institutional investors because to its extremely limited supply, the founder, CIO, and CEO of ARK Invest, in a recent interview with Bloomberg Television, reiterated her $1.5 million prediction for Bitcoin.
Performance of our funds since the election, they've far outpaced the market, outpaced the Mag 7 and so forth. So I think what the market is beginning to say is this administration is going to support innovative strategies, anything that will accelerate the growth, increase the productivity of our economy. Deregulation is going to be, we think, a very large part of that. Tax incentives, tax rate cuts as well. You mentioned perhaps the cutback in government spending programs. You know, in our mind, government spending, longer term, is taxation in one form or the other. It's got to be paid for with increased taxes now, increased taxes later, or basically through inflation, inflating away the debt. So we think that's going to be very positive, this drive towards increasing the efficiency of the government, which will then limit the kinds of tax increases we've seen over the last few years, and perhaps even continue to roll back taxes, leaving more for the private sector at the expense of sort of inefficiencies in the government sector. In terms of turbocharging growth, I think if tax rates, if this administration is going to cut tax rates, the most important thing it has to do is make sure they're retroactive to January 1st of 2025, because, and we learned this from the Reagan administration, if they defer or phase in tax cuts, businesses and individuals will wait for the lower tax rates, and that can weaken economic activity. Beyond that, deregulation, critically important. I think one of the reasons venture capital has had so much trouble during the last few years and strategies in the innovation space, especially in life sciences, is because M&A has been prevented by the FTC. That is going to change. So we are finally going to have price discovery as strategic buyers bid for these innovative companies. We'll see how much they're really worth. This has not happened in a long time. Yeah. We also think, therefore, there will be liquidity events for private companies into the public world, which is also going to become very important. Well, what's interesting about Bitcoin today, now that we're going to get more regulatory green lights, we're seeing institutional investors focus on this new asset class. And as they're learning about it, they're saying, wait a minute, This new asset class, or this component of a new asset class, Bitcoin, is going to reach 21 million units out there, 21 million Bitcoin out there at its peak, and no more from there on. Where are we now? We're already above 19.5 million units. And so if institutional investors are looking at this new asset class more seriously, and Bitcoin is really the first of its kind in a new asset class and will be, we believe, the biggest opportunity of them all, they must consider an allocation. And so supply-demand, they're doing the arithmetic, and we see 1 million to 1.5 million by 2030. That the probability of that has increased because of institutional. Well, I think it's a very big idea, and it's not just speculative. It's a global monetary system that is rules-based. It is private, it is digital, it is decentralized, and it is backed by the largest computer in the world, or the largest computing system. It's the most secure network in the world. So that's very important. Gold would be in the same category. Gold is a store of value, and it is fairly scarce. What's interesting, in the last year, with the last halving this April, the increase in Bitcoin, the number of Bitcoin per year, the percentage increase, dropped to roughly 0.9% per year. That is below the 1% long-term growth in the supply of gold. So it is becoming even more scarce than gold. And the difference between gold and Bitcoin is when the gold price goes up, as it has, production goes up, the rate of increase in the supply goes up. That cannot happen with Bitcoin. It is mathematically metered to go up now 0.9% per year for the next 4 years, and then the supply growth will be cut in half again. So we think you can use gold as a guide in terms of what this asset class is right now, at least. It's very definitely a store of value, a digital store of value, and it's a very big idea from our point of view.